big final. This is the Superbowl for you, right? And if you think about selling a business similar to sport, what do athletes do? What do teams do? They get in condition, they get in shape, they get coordinated, they get organized, they get focused, they have a plan, they work the plan.
Welcome to How the Deal Was Done. Thank you for joining us. I'm Laura Queen, founder and CEO of 29 Bison, human capital advisors to the middle market, and your host for today's episode. Preparing for a deal, especially your own exit, is a sport. Mark Gaeto, a partner with Falcon Capital Partners, a leading investment bank in the Philadelphia region, joins me for today's conversation. Mark will tell you this may be your Super Bowl. Getting to the biggest game of your life takes preparation and requires that you work the plan. We invite you to grab a cold drink, sit back, relax, and listen along as Mark offers some coaching from the sidelines. You won't want to miss this peek into an expert deal maker's playbook. If you like what you hear, please share this episode with others. Like and follow us on this channel and our other social media outlets, including LinkedIn, Twitter, Facebook, YouTube, and Instagram. If you're curious about us, we can be found at 29bison.com. That's 29bison.com. Thanks again for being with us.
Already acclaimed in boardrooms the world over, How the Deal Was Done brings together the most interesting and candid deal makers in investment history, characterizing the men and women who have conquered the capital markets, finding new opportunities in the immense landscape of buyouts, mergers, divestitures, and bolt-ons. With your host, Laura Queen, founder and CEO of 29 Bison. How the Deal Was Done will take you inside the deal maker's mind with true life tales of victory and defeat, navigating the raging rapids of deal making. And now, How the Deal Was Done.
Mark, good afternoon, and thank you very much for being our participant on this week's episode of How the Deal Was Done.
It's a pleasure to be here. Thanks so much for inviting me.
Thank you. To begin our conversation today, we would love to share a bit about your background. Would you let us know how you get to this place?
Oh, wow. Where do you want to start? How far back?
You tell us. How far would you like to go back to share?
Well, I didn't grow up in banking. So when I graduated from school, my first job was with EDS, Electronic Data System. As you know, Ross Perot passed away earlier this week. Mm-hmm. And that was a great experience for me. In that I went through a systems engineering development program. And it was good at going through that because I realized I really didn't want to develop code. And they realized that I probably shouldn't be developing code as well. But I got through the program and, we started out with a couple hundred kids and we ended up with like 40 or 50. And I ended up engaging with clients. And that gave me the idea that maybe I should be in sales. And I got some advice to do that as well, not from EDSers, but some other folks. And I became a successful software sales executive. Every place I've been in the top 10, top 5, top number 1 guy. And at SAP, I was able to participate in that ERP year 2000 craze. Right. Made a fair amount of money and invested in an SAP practice. Dutch guy, Robert van der Linden, and Jeff McDowell. The three of us kind of got this thing going, and we grew the firm, and we sold it right before the crash. And so we sold it at a kind of just like today, in a perfect time to sell your business. Mm-hmm. And we all went our separate ways, but I really enjoyed the experience. In fact, I spearheaded that experience, that whole cycle of engaging the banks, going through the process, talking, being the lead, the lead in talking and presenting our company to the various buyers and investors. So the light bulb went off and said, I kind of like this. It's a sales process, number one. Number two, I understand operationally what makes a firm valuable. And it's all about growth. And it's all about, just not revenue growth, but margin growth and a really good culture. Mm-hmm. And so I actually had people start to call me up and say, Mark, wow, that was fantastic. How did you do that? And one thing led to another, and I ended up joining Falcon. So I've been with Falcon now for over a dozen years. The firm has, over that time, been involved in hundreds of deals, and each one's different. Each one has its ups and downs, and so it's been a fun journey. The kind of where I see myself differentiating from other bankers is that I've actually was an entrepreneur, was a business owner, was that guy that turned the lights on in the morning, turned the lights on in the afternoon, done with the had to deal with the needy payroll, had to deal with the HR issues that are many,
sure.
and kind of balancing that work-life, company balance. I have to say, I have to give credit to my father and a couple of my uncles. They were all private business owners themselves, so I kind of lived in that environment, and there were good years and bad years. So you kind of realize that you're going to have them, and you're just going to hunker down and fight through them, and stay focused and stay persistent, and follow your dream, right? And so that was that early education from them was great. And I saw some of them lose their businesses and do stupid things because they didn't have the right advisors involved,
right?
Either from accounting or legal or banking when they were ready to retire. So that was also kind of an internal driver to me. So when I engage with people, I always think about those, my father and my uncles who had to go through similar things. And you recognize it's not just a transaction, because I think a lot of bankers look at it. They think I'm just selling another house like a realtor,
right.
And you have to understand you're dealing with someone's life's work, right? And you have to get involved, and you have to understand personalities and the issues between husband and wife, between partners, between management and employees, and some of the other crazy stuff that goes on, right? So it's more about being someone who can listen, someone who can understand what you're going through, someone who can balance, try to take things down to let's take a step back and look at this. Let's distill some of the emotions or some of the anger and some of the exuberance.
Right.
Like, hey, you're not worth Google's evaluation, right?
How disappointing.
Or you got this much money, you can't spend it, the day after the sale. You got to talk to a wealth guy, you got to talk to an estate person, you got to plan, and that's what we're really all about. Getting ready for an exit. We bring our operating skills, we bring our financial skills, we bring our own experience as owners and investors, and say, there's a right way to do this, guys, and you need to listen. So,
when you look back over the dozen or so years here with Falcon, are there things that, for you personally, you've learned over that period of time and you now do differently as a result of some of those early experiences?
Yeah, I think what you learn over time is, it's a constant refinement. Every deal is different. Your Uncle Murphy's Law kind of appears here and there. And what you really got to do is you really got to get some great planning involved. And some of that takes place on the business side, on your client side. And the hardest thing that I find with my clients is when you sit down with them and they say, I'm ready to go. You almost got to put the brakes on, right? And you can say, well, that's great, but let's think about, where you're at and where we need to go before we actually hit the launch button. Because many times you have to talk to people about their accounting. What we find is that their accounting's not right. They need some tweaking on the legal side. Their partnership agreements need to be updated, for example. Other agreements. They don't have a wealth plan.
Right.
I mean, I just had lunch today with the guys from with a prominent wealth management firm, and they kind of say the same thing. There's a need to get all that stuff in place to advise everybody and to make it better for the owner.
Right.
When they exit. So trying to get them prepped properly, I guess, and there's a ton of issues. So your question about what could be refined, a lot of it's, how can we advise the owner and how can we get them to take actionable steps to do prudent things, even though it might cost them, $150,000 to do a quality of earnings with a major accounting firm or something like that.
Right.
So on the process side, it's all about people. And so it's all about hiring good people. So, that's true of any business, and it's true here at Falcon. So we really scrutinize people that can deal with the high finance when we have that need, run a project, be organized and analytical about that. And then, also being able to, just like the partners here, the managing directors here, be able to engage and empathize with everybody at the table, the buyer and the seller, but understand that our client, 80-90% of the time, is a business seller, a private business owner, and our job is to sell through the numbers.
Sure.
Get them, if not the best valuation, the best deal terms that works for them in that situation.
Right.
So constant refinement, we're constantly learning, and that's the fun of it, right?
Yeah, absolutely.
Yeah.
But and that's what keeps it interesting. I imagine that you, like us, come back for more because everyone is unique and somewhat different and offers a different challenge.
Oh yeah. Trust me, they're all unique, and everyone has something to offer, and good and bad. and so I'm not perfect either, but it's just like you just learn a lot. So a lot of it stems from either the uniqueness of the business, which we usually can get our arms around fairly quickly, but it's the personality and emotional and the interrelationships that need to be worked out many times,
right,
to get a deal done.
So to that end, our reason for offering this podcast is to share with our audience some of those stories. Do you have one or two of those stories based on your experience you can share with our listeners?
Yeah, so look, we had one business owner who, and it's great that after you go through a transaction, you become fast friends with many of these people.
True.
So this one gentleman just had really poor account, and he went out and got his books audited. But having audited financials and having granular accounting statements on a month-to-month basis, so you can dig in and look at the trend lines and tie things together, is different. And so it took us a lot of time to understand his books and go back and reconcile everything with all the adjustments that the auditors were making. So that took some time in doing that. And we ended up, he saw growth. He wanted a private equity deal. And we found a private equity firm, and they bought 75% of the business. So he still retained 25%. This was the CEO. What he didn't realize was the nature of the deal. And what I mean by that is most people aren't, I mentioned high finance before, not that this is high finance, but aren't just financially savvy. This guy was technically brilliant. This guy, in terms of engaging his clients and selling and delivering on the projects, was brilliant, absolutely wonderful. His books were a mess, and he didn't understand numbers. He wanted growth capital, and he wanted to take money off the table, but he didn't understand that we were going to put some debt on the business. And so he got very nervous with debt. He never had debt. Mm-hmm. And that was a situation where we had to kind of talk him off the ledge and get him right. It really took him a couple of years post-deal to get comfortable with that. Now he's, he gets it, and he's advising his network of business owners on, hey, this is what happens. He's a smart guy, he's quick study. So just getting people comfortable with the deal was an issue.
How did you do that with him? What was the conversation when he comes to the moment where he realizes now his business is leveraged and he doesn't know what to do? What do you say?
Well, we talked about the use of leverage. we brought out our models and we said the use of leverage helped him get the valuation, number one. So number two, he put $30 million in this market, right? Mm-hmm. So that's yours. No one can touch that. No one's coming back to grab back at that. Your family is set. And he thought his business was only worth like half that.
Wow.
Right? Initially. And so we got him a good time. So your family's set, right? Let's do that. Here's the models. The reason you got good value is how leverage juiced the deal for this buyer based upon your cash flow, right? So his whole argument was, hey, I'm paying, my cash flow is paying for the business. We're like, well, yeah, for some of it, but not all of it. So we had to walk him in detail and show him how that worked, how that got him to the valuation point, how that's going to get him to a higher valuation point in the future for that 25% that he did. Mm-hmm. And it was a couple hours conversation, mm-hmm. right? We might have had to go back and forth a few times just to reinforce it and step him through it, because he was a inquisitive, questioning type of personality.
Sure.
And we did that. So some people don't get that at all.
Right.
Right? They're brilliant at operating a business. They intuitively know they're making money. They might be pulling a lot of money out of the business and therefore think everything's fine. But when you take something down to GAAP, accounting rules, regs, the business starts to look a little bit different. When you normalize it and say, hey, you're not going to pull, X amount of dollars out of the business, and you can't have certain people on your payroll, and you can't be buying these things through the business, which happens quite often. You have to educate those people so that the sector that we play in, at lower end of the middle market, private-owned businesses, family-owned businesses, there's a lot of education and a lot of patience that has to go on.
Right.
Mm-hmm. It's easier when you have institutional money backed businesses, people that are backed by venture or private equity type companies. So, or just are, just better educated in financial way.
Right.
There's always issues we find. There might be IP ownership issues. There might be partner issues. There might be, something always flies out at the last moment. Hey, I forgot to tell you that I actually don't own the software. Something like that. Something like, why didn't you tell me that before? Or there is this lawsuit, or it was, So you just have to be careful and ask the questions and don't overreact, because that things are going to pop up.
What's one of the most memorable pop-up stories you have?
Think about that. So, thankfully, as I said, you talk about refinement, we're getting better and better on educating people on what they need to pay attention to and be prepared for. So, I remember one firm that we sold here in the Pennsylvania area. It sold software into the public safety world, and they owned the software. They bought it from another company, and they've owned it. They owned it for a couple decades, and they refined the heck out of it as well. But technically, there were some issues. They didn't 100% fulfill the buy agreement, the purchase agreement that they had with this other client, which was a big client. And so having to go back and getting people to sign off on that. And, we made the case that, hey, the core code that you gave us a long time ago really doesn't exist. And there's this technicality. They were totally cool with it. It's a brilliant thing. But the nervousness, the anxiety that mm-hmm. happens with both buyer and seller, the banker and the attorneys, was high.
Had they realized before you were looking at it that there was an issue, or wasn't it until you started the deal process?
Well, I think what we did, it was in the deal process when we kind of said to have you complied with all there's 4 things that they had to comply with, and there's one of them that they didn't. And the buyer was saying, well, can someone make an issue of that? so we had to go back and fix it.
Mm-hmm.
And so we see things like that happening.
Right.
The big buyers, if you're selling to one of those big tech firms out on the West Coast, and we've sold to them a few times, they get very, very, very thorough and demanding. They don't want to have any liability, any exposure whatsoever, and they're paying you a boatload of money. So you have to jump through hoops sometimes to do things that may be beyond the call of duty in certain situations. But if you want to get the deal done, you try to find a way to do it. So there's things like that. I think it's things like that. Things those things that pop up, and there's always something. On the relationship side, we've seen partners say at the last moment, I'm not selling because Mr. Majority Owner or Ms. Majority Owner, you're getting too much, and I really created this business for you, and I need to get more. So we've seen that kind of stuff.
Right.
And, and part of that could be a strategy by that minority shareholder, and so it's hard to foresee that kind of stuff.
Right.
Yeah. I mean, we've seen deals. Most of our deals go to completion. We see deals fall apart because they can't hit forecasts.
Right.
So they project that, say in 19 they're gonna be X million, and as we forecast things out, there's no way we're gonna hit X million, and deal changes. And so we've seen some of them. And that's hard to go through. And usually our advice is, hey, if you think you can fix it, we'll take it out next year, right?
Right.
Or we can come back to these guys and say, hey, we're going to fix it, and if you're a buyer, then we'll give you guys a first shot at this valuation.
Right.
So.
Some of the audience members, the folks listening to this, will be business owners in the place where they're prepping themselves for the possibility of a deal. What's your advice to them? What are the things you think are most important for a seller to pay attention to be attentive to before they even come to you or someone like you?
Well, look, we have a whole kind of roadmap, right? So it's a methodology of sort. So, and as what we'll do is we'll dig into the numbers. We can help them go through this, but you can do it on your own if you want. Go through the numbers. We look at the last 3, 4, 5 years. We try to get them to a GAAP standard. We work with accounting firms to do that. We start to normalize the firm. So if that owner is taking a lot of distributions, we try to normalize it to as if it was a small public company. If there's any other kind of one-time or business owner type stuff going on, we try to take all that stuff out and look at the business as is and put a valuation to it. Right. And then we that valuation is dependent on, it could be dependent on strength of revenue, strength of margins, strength of cash flow. So we look at the numbers and we kind of understand what we're doing. And we try to get the owner to make sure that his story matches the numbers. There's a lot of people saying, I'm taking over the world and the greatest thing since sliced bread. And saying, well, you're a $10 million business, you've been growing at 10% a year. Where's this greatness coming from? How come this greatness hasn't materialized? So we have to get the stories lined up with the numbers. There's some legal things. We make sure some of the some contractual things in material contracts. We always like to get them to think about talking to a wealth management firm or an estate attorney so they can get that situated. And not all, but some of the wealth management firms are pretty good at having people think about post-transaction and what they're going to do with their lives, right? And spending patterns and all that good stuff. So we like people to do all that stuff, and we, as former business owners, will kind of play quarterback, play project manager on that, and we'll maybe weigh in on some of the operational issues, talent, right? Your brother-in-law is the VP of sales. We need to hire a better VP of sales.
Right.
Your product management road, you don't have a product roadmap. You're dealing with every request that your that your customers have to change the software they're doing. Let's put a product management process in place. Let's solidify your sales forecast because we want to sell the future, right? We want to sell how great it's going to be. We want to understand how you compete against your competitors. We're working with a firm right now. It's taken us 6 weeks to get a story down. These guys are a large firm, beautiful website, all the sales slicks you can have, but I can't get their 4 management team guys to agree on what the message is. Well, you would think they would have that, right? They have it, but now where the rubber's hitting the road, they want to refine it. And so, and we're trying to say, well, that's good. You can say that stuff, but it's got to tie to the numbers, and those numbers have got to tie, and it's also got to tie to your reasonable achievement for the future. What are you targeting to achieve in the future? So, this whole kind of like balancing and project management and adjustment and refinement, so that when you sit down in front of an investor or a buyer, they think you're a McKinsey consultant. They think you got 3 MBAs from Harvard or Penn. So, they're like, wow, this guy or gal are really on top of this.
Right.
So there's this whole prep, orchestration, dress rehearsal. Let's get you ready for this because this is the big final. This is the Super Bowl for you. Right. And if you think about selling a business similar to sport, what do athletes do? What do teams do? They get in condition. They get in shape. They get coordinated. They get organized. They get focused. They have a plan. They work the plan. They have a plan. They have a plan for punt returns. They have a plan for being in the red zone. They have a plan when they're down by 20 and when they're up by 20, or, they have plans and they have a playbook. And so you don't have to get that crazy. But I think the point is that, set a plan, work the plan, and with an objective to sell the firm a certain time frame, within a certain range of valuation, and where everyone at the end can say, I'm happy. Right? So I don't know if that answers your question because there's a lot there, but and most business owners get all that stuff, right? But they're just too damn busy.
Right.
I mean, even with us, we hired a bank. And we had 3 great executives, but we had good people underneath us too. But we were chasing deals, dealing with customer issues, HR issues, partner issues, and we were running hard.
Right.
All right. And so our bank, which actually was sold to a bigger bank many years ago, they were great, and they were a bank much like Falcon. All business owners knew the drill. Knew how to run a project, because that's what it is.
Right.
And knew how to engage with the owners to get the best and optimized outcome for them. So
that's fantastic, and it did answer my question. That's great.
Yeah, good.
So Mark, share, if you would, with our audience a bit about Falcon, who you are, what you do, and how folks can get in touch with you.
Yeah, it's okay. Falcon's a boutique investment bank located just outside of Philadelphia. We have 12 people, 12 employees that work for us. The founders, the managing directors are all former business owners. The people that work for us are all former Wall Street bankers. So we have a good mix of financial, operational, strategic expertise. We do 3 things. We help people sell their business, we help them buy other businesses, or we help them. We take them through a strategic advisory in order to get them ready for an exit, right? So sell side, buy side, and the strategic advisory work. We kind of take a patient view. We take an organized approach, and the goal is our tagline here is to sell through the numbers, right? And get the best value, really get the best deal, valuation, deal terms, and the home environment, the environment that business owner wants. Right. So we've been doing this for about 18 years. We've gone through hundreds of transactions. We do have a focus on the lower middle market. So our firms have revenues from, say, $5 million to a couple $100 million.
Okay.
All right. And, the smaller firms tend to be software companies. So our focus is software-enabled services, other services around technology. That's we kind of have a healthcare practice and an enterprise practice around that. And then we have, and those practices are national in nature. We have clients on both coasts and in between. And then regionally, we have a commercial industrial practice where we've worked with packaging companies, light manufacturing, distribution companies, things like that, where we feel we can get smart about the business and smart about the issues. And if we're not, we're happy to refer them to other banks. Done that, quite a few times. So, that's Falcon. We have a great culture here. No one's left us except one to go get his M.B.A. at Wharton.
Good for him.
And he's now with Bain, so it's good contact base.
Sure.
So, but we kind of really enjoy what we're doing. We enjoy, because we're former business owners, we just enjoy getting other business owners to a point that caps their career and protects their family and secures their family's future.
Mm-hmm. Perfect. And Mark, for interested listeners, how can they get in touch with you?
Sure. We're at www.falconllc.com. You can get me by email at mgaeto@falconllc.com. And my telephone number is 610-989-8903. And me or one of the partners would be very happy to help you.
Fantastic. Mark, thanks.
Laura.
It's been such a pleasure having you with
Thank
us, sharing your stories. We wish you great luck as you continue.
Thank you very much.
Our pleasure.